Hello, and welcome to Financial Fundamentals with the Financial Empowerment Center, where we cover tips and best practices to live life financially empowered. I'm Tierra, a counselor at FBCU Nashville, and today I'd like to talk with you a bit about banking. Banking can be a confusing topic for some. Where should I bank? What type of account should I get? Is a savings account necessary? What features should I look for in an account? I'm so glad you asked. Today, join me and the United Way of Greater Nashville's Financial Empowerment Center as we break down the topic of banking bit by bit. Let's call it Banking 101. We'll discuss the difference between banks and credit unions, account types and structure, benefits of having a savings account, and what features to look for or fees you should be aware of. Let's jump right in, shall we? When discussing the topic of banking, one of the most commonly asked questions that I get from clients is whether they should place their money with the bank or a credit union. Today, I created a chart for us to take a look at that kind of gives you a little background on each, but also some of the differences and the pros and cons of each. So to start off, banks are insured by the FDIC, which stands for the Federal Deposit Insurance Corporation. This means that each depositor is going to be insured for a total of $250,000, depending on how much they have in the bank, but that's the amount up to. So that doesn't mean if anything was to happen, you get the full 250. It's just the amount that you have currently deposited. Credit unions, on the other hand, are actually a part of the NCUA, which stands for the National Credit Union Administration. They will also insure their clients for up to $250,000 as well per deposit account. Banks are considered a for-profit business, while credit unions are considered a nonprofit business. As far as how they refer to their clientele, banks refer to their clients, as customers or clients, while credit unions refer to their clientele as members. Some of the advantages of going with the bank opposed to a credit union would be branch access, ATM availability, and product selection. While some of the advantages of going with the credit union could potentially be lower fees, higher interest rate, and access to financial literacy services. Some of the disadvantages of going with the bank over a credit union would be higher interest rates, higher fees, and stiffer underwriting. And that is due to the bank being a for-profit business. While at credit unions, some of those cons could be limited branch access, acceptance, because you do have to be a part of a community or specifically have like a common interest to be a part of the credit union. That's why they're referred to as members. So you do have to be accepted, and also limited product selection. So those are a few things to keep in mind when deciding whether you should go with a bank or a credit union. It's really based on a personal choice, and it's not one size fits all. So once you do decide if you want to go with the bank opposed to a credit union, then it is time to take a look at some accounts, because that's what brought you there in the first place, right? So some of the accounts that could be offered or account types are checking accounts, savings accounts, money markets, time deposits or certificates of deposit, or commonly known as CDs, and IRAs, which stands for individual retirement accounts, but you do want to check with your institution for availability. So with checking accounts, those are the very basic kind of, what you want to start with. I do have some clients that do start with savings accounts first, but the reason you want to have a checking account is because you can keep track of your cash flow. You can have your direct deposit sent there. You can do your bill pay online through there. It's so much you can do with a checking account, but that's your very basic account, just somewhere to house your money, your steady cash flow. Checking accounts, you can either get a basic checking account. A lot of banks offer student accounts. They also offer senior accounts, safe debit accounts, etc. There's so many different types. But my advice would be to go to the bank of your choice, sit down with the banker, have that conversation, let them know what you plan to use the account for, and they will definitely help you make that decision. Savings accounts are something that typically come packaged with a checking account, but it's definitely something that I suggest that all people have. Even if you can save maybe $5 or $10 a week, it's best to have it. And we'll discuss that later on. Savings accounts, you can get a basic savings account, and that would typically be offered at a brick and mortar, which is the traditional bank, or there are higher interest earning accounts now that can be found online. Some of the carriers of those are Ally Bank has one, Chase Bank, Capital One, and you can earn higher interest with those than traditional brick and mortars because those fees are kind of eliminated as far as how the traditional bank is set up. So it gives more back to the customer in essence. Money markets, which are considered a savings product, but they can also be looked at as a checking product. And this is why you can actually get checks on a money market account. That's a little known fact. But the way that they benefit the client is typically if it's someone that has a higher balance that they're trying to save, or maybe they have like a lump sum saved up now currently, instead of going with the traditional savings account, a lot of times people, would traditionally look at money markets. This was before the higher interest accounts showed up as far as savings. But money markets allow you to save your money and earn tiered interest based on your balance. So they're a really good thing to have if you are a person that, has a larger lump sum saved up and you're like, yeah, I do want to earn more on that. I would definitely look into a money market. That's something you could look at. We'll also talk about something else in just a moment, that time deposit, but also have a basic savings as well, just to house maybe your emergency fund, because that money market, you want that to grow. Time deposit or certificate of deposits are accounts that are basically termed. So what you would do is you would give the bank a lump sum of money. Some of them will let you do a CD starting out with $500. Some of them say $1,000 their minimum. It just depends. But you're going to put that money into a time deposit account for a term. And terms vary depending on, interest rates available and how long, you don't need the money. I don't need to touch the money for 12 months, so I can allow it to grow. Time deposits are great to use as well, if you're not going to need the money, but you want to make sure that it's money that you're not going to need in the future, because you can be penalized if you withdraw early before the maturity date. You do also have a renewal period that comes around after that term is up. So you can either take that money out or you can renew it and start a whole new term over and earn some more money. IRAs, or individual retirement accounts, are used for retirement purposes. It's used to house money that you're saving for, those later years in life when you're into retirement. We at the Financial Empowerment Center, you do have to be licensed to speak about those type of products because they're considered investments. We can, give you background on what an IRA is, maybe an idea of other products, but for specifics, you definitely want to check with your institution or maybe visit an investment institution directly like Fidelity. So we talked about savings in our previous slide about a savings account, but we didn't talk about like the importance of savings and why you should save. So the first bulletin is pretty scary because we're still in some ways dealing with that. We're still digging our way out. But 2020 and the COVID-19 pandemic, it came on all of a sudden. People, they lost jobs, people lost family members, and it's just been a very difficult time for not just only us, as a country, but, all around the world. We've all suffered from this. So having a savings last year was definitely a lifesaver for a lot of my clients. It's a lifesaver for me as well. And it's definitely a reason, that we can relate to that's like, okay, yes, I definitely need to save, because you never know what's going to happen. Emergencies. That's the reason to save, whether it's a medical emergency or maybe it's a car emergency, or maybe you have to go out of town unexpectedly. Job loss, life's unknown, COVID-19 pandemic. They tie right in together. Goals and major purchases. So maybe you have a goal of taking a trip and you don't want to just keep your money at home under a mattress or in a shoebox. Definitely store it in a savings account. That way you can earn some interest, as well as major purchases. If you're saving to purchase a car or for college for the kids, there's special accounts for that as well. Or if you're saving to purchase a home, savings accounts is the best place to house that money. Definitely suggested over the house, definitely suggested over a safe deposit box. And children and family. That goes back to the education piece. Children, I know I don't personally have any children, but children, they like to keep you busy, sports, different events. So you want to save up for that, maybe family vacation. So these are just a few reasons as to why you should save. And savings is something that we do help you with at the Financial Empowerment Center. So if that's something you struggle with or you need some assistance with creating a savings plan, that's something that we can definitely help you with. So please reach out. So when you're thinking about access, features, and fees, you definitely want to ask yourself a few questions. How would I like to access my account? What features or benefits are important to me? And what are some potential fees? So of course, with access, they have online and mobile banking now. You want to make sure that you have access to ATM locations. If you're a person that likes to write checks, make sure that you have, how many checks can I write on this account before a fee? Do I have access to checks? How much are checks? Debit card, ATM cards. Features, you definitely want to look for bill pay. That's definitely the ability to pay your bills online. For some people, it definitely helps them stay on a schedule, which is really good. Fraud protection, some banks have what's called lock it, or where you can lock down your card if it happens to be lost. If you fear that it's been stolen. Some people I know lock their card down if they have, a little overspending. Just to the extreme. It's just up to you. Each person knows their own self. Mobile check deposits is definitely something you want to look for. With COVID last year, I know a lot of banks were shut down for a while, and they were actually encouraging clients to do mobile check deposits. A lot of them waived the fees. They made the money available for you then. So you definitely want to make sure to have availability to that. And it is very simple. And one of the last features that I love is alerts. Alerts are very helpful. You can set alerts for if you're about to overdraft, if you have overdrafted, if your account is below a certain limit, whenever there's a transaction. It's definitely a great kind of fraud protection feature as well. Fees you want to kind of be aware of, as I mentioned, overdrafts. Those are the hated things. NSFs, insufficient fund fees, foreign ATM fees. If you happen to use an ATM from a bank that is not yours, sometimes you will be charged for that. A lot of times you are. Definitely be aware of when you go to maybe like a Thornton's or any type of gas station that has a ATM in there and it says it's free. A lot of times it's not free. It's free for them, but it's not free for you at your bank. So definitely keep that in mind. Monthly maintenance fees, going back to the conversation about, picking your account, they're going to have that conversation with you to figure out, do you have a direct deposit coming in each month? How much is going to be your average daily balance? So they can figure out a way they can get you an account that's going to waive a monthly fee. If not, they'll definitely try to get you an account that has an affordable monthly maintenance. Excessive withdrawal fees is something to keep in mind with savings accounts. Savings accounts are actually a part of like a government regulation. It's called Regulation D. So they do kind of restrict the amount of transfers, withdrawals that you can do from the savings account because it is meant to save. So it is something that's done through the government. Yes, a lot of people don't think it is, but it's not the bank just being mean, but it is a government regulation. So you definitely want to keep that in mind. Typically with savings accounts, you have 3 withdrawals and transfers. Sometimes it's 6. Money markets are typically 6 as well, but you definitely want to check with them on that so you can avoid that fee. That's definitely easy money you can give the bank if you're not aware of it. Checks, like I said, how much are your checks to order? A lot of banks do not do free checks anymore. The world is different. Back, when I first got my account when I was 16, checks were free. They're no longer free anymore, but they can definitely help you find something that's kind of cheap and reasonable. And then you also want to check on any fees for a return check. So if you happen to write a check and it's returned for any reason, you want to know. So hopefully I have answered some of your questions you had about banking, or at least maybe laid it out there for you, created a great picture. But if you've enjoyed this video, don't forget to like and subscribe. And if you're ready to get started on your path towards financial empowerment, our contact information and website are in the description below. And remember, the best time to start is now.